In this video, we're going to talk about the margin of safety and how you can use it effectively to reduce risks on your investment and make a wiser investment decision. So what exactly is margin of safety? Margin of safety is simply the difference between the intrinsic value of a stock and its market price. For example, the market price of a stock is $6 a share. You find that its intrinsic value is about $10 a share. So in this case, we have a margin of safety of $4, or 40%. In fact, the higher the margin of safety, the lower the risk on your investments. The margin of safety is achieved when a stock is bought at a price which is sufficiently below underlying value to allow for human error, bad luck, or extreme volatility in a complex, unpredictable, and rapidly changing world. Or in other words, using a margin of safety will allow you to correct your mistakes in your investment analysis and valuation. Well, when it comes to stock valuation, we make mistakes all the time. Every valuation method is implemented based on assumptions. For example, when using the discounted cash flow model, you'll have to assume that a company's cash flow will grow at a consistent rate over the next 5 to 10 years. What will happen if its cash flow grows by 10% this year, 5% next year, and negative 8% in another year? You see, our valuation method is somewhat biased, and that's why the margin of safety concept is applied to value investing. So how much margin is acceptable? Well, it depends on how much bad luck you're willing to face, your risk tolerance, and how much money you can afford to lose. Losing some money is an inevitable part of investing. In fact, there's nothing you can do to prevent it. But to be a sensible and intelligent investor, you must take responsibility for ensuring that you never lose most or all of your money. If you think you can't afford to lose much from your stocks, it always pays to have a good margin of safety, say around 30 to 40%. This means that you must buy a $10 stock for not more than $6 or $7. Remember, the higher the margin of safety, the better. And also make sure that you will always use a margin of safety of at least 25% for the sake of your money's safety. In the next module, we'll dive into some investing principles that you should always keep in mind when investing in the stock market. Okay, see you in the next video.